I'm interested at this time that what has been your business model, and I know it's of consumer credit, basically reducing costs. How has that managed to see that growth in what has been a much tougher time for tech more broadly?
Yeah, I think what's interesting to note here is that the landscape, which if I kind of paint the picture a little bit, it'll explain why we're seeing this disproportionate growth to the rest of the market. And that is that the landscape today is that we have high cost of capital. What that typically means is that your high street lenders, your banks, tend to actually withdraw themselves from lending. So you have financial exclusion at its highest. So the demand goes crazy for credit products. At the same time, you have the cost of living has gone up. And so you have demand from the mass market is really intense for credit products. And typically what happens is you have lenders actually thrive in a market like this, but they make a lot of money off the customer. What's unique about Zilch is that we found a way to generate ad revenue from brands when our customers shop. And we're using that to offset the cost of credit to customers while servicing this mega demand. So for us, we're seeing ultra high growth through the next year to 2 years based on all of this coming together. Of course, most uniquely providing lots of savings. We're talking about hundreds of millions in savings in interest and fees for consumers as they use our product and move away from traditional lending products like revolving credit cards and things like this. So there's the opportunity.
They can improve a credit score, not have to depend on credit cards. I'm interested, Philip, as a South African entrepreneur, to come and build in London. Why?
I mean, I think it's part of why there's the Tech Summit tomorrow. There's a lot going on in London. Obviously, we look at the market here and say, you know, we really wanted a hub that was going to allow us access to Europe, of course, to the United States.
And you've still got access to Europe?
And we still do. I mean, you know, a lot of people, of course, have spoken about Brexit and what does that change. The reality of the situation is that you just need to make sure your licensing is correct and you understand how to operate in that environment. Regulation, by the way, as long as it's clear, is a fantastic thing. We've also said this for our industry, which is why Zilch is one of the only regulated providers in the space. We're calling for regulation in BNPL. And so I'd make this comment in the vein that you've just mentioned. As long as the rules are clear, you can engage with those rules and you can transact. And so we do have access to Europe. We understand Europe very well from the United Kingdom and equally the United States, which is a massive opportunity for us. So we really wanted to be in London. We think we can control what we're doing from here really well. Great, unique pool of talent, lots of walks of life and different types of backgrounds in our business. And we really wanted that diversity in the company as we built this maspirational product, something we want everyone to enjoy.
Maspirational. Philip, what about those that you woo in for money? You just said, of course, you're now viewed as a unicorn. Money has been allocated from venture capital. Is that pool of money UK-based? And is it firm at this moment when people are questioning those sorts of valuations?
I think it just depends on the business. I mean, we've seen a lot of companies raising flat rounds, up rounds. You've also seen, of course, down rounds. There's been an adjustment. There's no doubt about that. The way we think about it ourselves is, do you have enough capital and do you have a sustainable business model to get yourself to break even and beyond right now in this market? I think that's how we see at least our company. And you know, the strong view is as long as you can demonstrate that, and that is the case, you're probably quite a standout business right now. And that's not because there's a lot of terrible businesses. It's just because a lot of money was chasing high yield. They wanted growth at all cost. And the problem with that is they sacrificed the margin and a real business model in some cases for that. And the chickens are coming home to roost. If you have a real profitable margin and you've got enough capital to get to break even or beyond, we still think that you can demonstrate the real value in your company and you can grow in and beyond your valuation. And that's really how we're thinking about our business. So pools of capital-wise, I mean, I think in the UK, we sometimes underestimate second deepest pools of capital on this planet are in the United Kingdom. But we certainly do see in our business a spread of capital from the US and the UK. And that begs the question, where do you go next? What do you do next as a company, which we're evaluating right now?